A sole proprietorship or a partnership is basically, that's the easiest thing. I can just say, okay, I'm a sole proprietorship. One owner, all the income flows through, passes straight through to my tax return. I file a Schedule C with my tax return. Everything flows through to me. All of the income flows through. All of the liability flows through as well. So you can't sue a sole proprietorship. You sue the sole proprietor. That's the problem. Partnership, similarly, 2 or more owners. You have to have at least 2 people for a partnership. And again, traditional partnership, you file a partnership tax return for informational purposes only. All of the distributed income flows through to the partners. All of the liability flows through to the partners as well. So you have to think about that. An S Corp is a dying form of small corporation. It is formed as a corporation, but most of the income flows through to the owners of the corporation. A little bit more complicated. What you see more often is an LLC, which is a limited liability company. A limited liability company is kind of like a hybrid between a corporation and a partnership. You limit the liability of certain partners to exposure to being sued. So you can limit some of your liability. The income still flows through to the people within that limited liability company. It's a little more complicated. You have official filing status. You have to file paperwork to become an S Corp, limited liability company, or corporation. A sole proprietorship or partnership, you can just kind of say, I'm going to do this. A corporation is the most complicated form of business organization. You have to file legal paperwork. You will have to get an attorney to incorporate if you want to do that. Most of the time, beginning businesses don't start as a corporation. It's just not necessary. You see a lot of people starting off as sole proprietorships and partnerships. Now, the deal with a sole proprietorship or a partnership is that it's its own entity, but every time you bring in a new owner, it's kind of like reforming a new entity. So if I was a sole proprietorship and then I decide to bring in a partner, it's like reforming a new business when I have that partnership. There's no legal paperwork required, though I definitely suggest if you're going to be in a partnership, you have what's known as a partnership agreement, where you guys kind of decide in advance who's going to do what and how the money's going to get split up. So this is the first question. How do you decide what you want to do? Probably talk to the people you want to do business with. Talk to your legal counsel. Find out what's going to be the best decision for you. Talk to your accountant.